My name is Brian Proctor. I'm the president and CEO of MENTE Group. We're an aviation consulting and transactions firm based in Dallas. I'm really excited to be here. Al, Louisa, thanks for having us. We feel like that Corporate Jet Investor is by far the best presentation that's put on, and I really wish that I didn't have to go to MBAA and I could just come here, because it would save a lot of time and energy, and hopefully a lot of people in here feel the same way. But thanks for putting this on, and thanks for everybody being here. I want to talk a little bit today about ownership and rethinking the ownership model. It kind of ties into what Kenny just talked about with Wheels Up and what they're doing. And really what we want to think about is some of the trends that are happening right now that we're seeing, that our clients are sharing with us, and where we think that this market might be going on the opposite end. I'm not going to show any pictures today of Alistair coming out of the beach like I did last year, or the Queen with the Wheels Up logo, so I'll spare you that. But I will talk about the market. And I'm going to just jump right into some data here. Everyone knows the aircraft that are currently for sale in the marketplace. What we wanted to do was look back in 2004 and get a sense and feel of what's changed in the last 15 years in terms of availability of aircraft in the world. And so when you look at the chart, you can see a high concentration of airplanes below the $30 million range. And when you scale this all back, there were about 31 models that were being produced in 2004 with an average cost, and I don't like to use averages, but an average cost of about $17 million per aircraft. It gives you a context of what the universe looked like 15 years ago. There's been a lot of discussion in the marketplace about what's going on with ultra long range, the heavy segment of the sector, and we wanted to show what the new chart looks like. And you can see from the data right now that there's a much higher emphasis on airplanes that are above the $40 million level. And so one of the fundamental questions that we have, and one of the fundamental questions we think that the industry has, is there enough demand right now in the marketplace for this new segment of what we're seeing? When you look at it, today there are only 29 models that are manufactured, but the average cost of those 29 models is right around $30 million. And so to us, it seems like that there's a lot of emphasis on this high end. And the question is are there enough billionaires, are there enough CEOs of public companies who are willing to invest $60, $70 million in one of these aircraft? And it's a really hard question to ask. And it really hit us over the head earlier this year. We'll talk about that in a second. So when you look at the chart, you can see back in 2004, 2005, that there was kind of a linear decline in the number of aircraft that were produced from the light jets through the heavy jets. Today, that looks a lot flatter. And with that comparison, you can see that the number of airplanes that are out there on that high end the question is, can the market absorb it? We think that there's good rationalization of the fleet going on. There are fewer models competing in each segment, which that's a good thing. We think that the OEMs, especially Textron, has done a really good job of thinning out the ranks in terms of the airplanes that really sit on top of each other. We see a couple of key gaps in today's market. We think that between the $10 and $15 million segment, it's virtually empty. So if you think of that old Hawker 800, 900 XP, that was kind of the bread and butter of a lot of corporate fleets a long time ago, that $10 to $15 million aircraft really doesn't exist. The other segment that we see a tremendous gap is in this $30 to $40 million range. The 900LX is really the only aircraft that plays in that market. It's an aging platform. It's been a great aircraft. We're buying one right now for a client. But it's really the only option in that segment. And so we think that there's going to be some opportunity for the OEMs to re-engineer. But so the question is, will we see as an industry a move back towards smaller aircraft? When I say that, sort of that 40 million and below, or will we continue to see this evolution into the bigger aircraft? So it's kind of a fundamental question. If they build it, will they come? With the 7 models above $50 million and the upper end moving well in excess of $70 million, that gives us some concern. When you think about lending and how the lending structure works, if you have a portfolio of $2 billion, 3 airplanes in this segment would be 10% of that portfolio. So the concentration risk from a lender's perspective on the high end of the market gets greater and greater the more airplanes that are financed and that come into that. So I think that there's going to have to be, and I was really interested in the syndication discussion that went on this morning. I think that there's going to have to be more of that in the marketplace because the lenders are going to have to diversify how they're structured in order to absorb this higher end of the market. What does this really mean then? So, case study, earlier this year we had a Fortune 500 company, new CEO in first quarter, they missed earnings. We got a call in April, and the CEO wanted us to come up, and the idea was to sell some of the aircraft in their fleet. Wasn't a good situation. We don't ever like to receive those calls. But we went and we sat down and talked with them. As we reviewed the fleet, all of the aircraft were leased. And that was a good thing because from the standpoint of selling airplanes, it made it really, really, really difficult to execute the disposition of any of the aircraft. One of the things that stood out, though, was the G650 that they had in the fleet. They had purchased the airplane for roughly $65 million. The lease rate factor was at 0.9. They were spending $585,000 a month on the lease on the airplane. And so this is where it really got interesting and where the problem started. We were sitting around the boardroom, we were discussing it, and as we looked at the cost per hour of the airplane, the CEO really took notice. When you think about $7 million of capital employed and another $2.6 million in fixed and about $2.3 in variable, they were flying 400 hours a year. The net result was a fully loaded cost of $29,775 an hour. That's a big number. And the CEO just stopped the meeting and looked at everyone in the room and said, what are we doing here? And I think as we begin to look at these big airplanes, we're going to have a lot more questions about what are we really doing here. And so as an industry, we've got to look at a couple of things. I mean, the only way to change this equation is to change the utilization factor of the aircraft. And how can you build more utilization on a fleet that traditionally flies 350 to 400 hours? And then what does that do to residuals? What does that do to pilots? You have a lot of factors that go into that cost or that utilization number to try to get more utilization on the fleet. The other thing that we're seeing is the charter market. I really enjoyed Kenny's discussion. And is there a way that we can get more people into the TAM? And that's a great question. I think the fundamental opposing question of that, though, is there's a soaring cost structure, and these things are just damn expensive. And so with pilot comp going up 20% year over year for the last 3 years, maintenance and engine costs increasing, plummeting aircraft values, and what right now we're seeing about a 40% residual value loss in the first 5 years of ownership, with 50 to 60% of the cost of ownership in the capital, how can we then build a model that allows more utilization and is able to support this total addressable market that Kenny talked about? One of the things that's really interesting too is we're seeing these pricing tools that are coming up. You know, if you can go on your iPhone and you can download a charter trip and do it, what we starting to see is that there's more and more pressure on pricing and eroding margin in the charter world. And so what's going to happen in order for this to work is that charter pricing is going to have to go up. Right now, the owners of airplanes who are putting in 135 programs, and I'm thinking, you know, Lear 45 based in Richmond, Virginia on a 135, how can that owner continue to have his airplane in that charter market if the pricing continues to drop on every hour that they're generating in charter? And so we're going to have more efficient aircraft. We're going to have to tie all this together. The problem, though, as we get more and more efficient airplanes, is that those airplanes are expensive when you buy them new. And so we've got this complex equation of things going on with residuals on one side and costs on the other, and can we ever get the balance that we need there? On a brighter note, and for all of those here who like to save money, and when I know Christmas is coming up, I would recommend that all of you charter a G650 on the way home. You know, most of you are going to go back to New York. That's where most of the people here live. It's about a 2-hour flight. You're going to be able to save about $40,000 if you charter a G650 based off of the DOCs, because they only charge about $10,000 an hour for chartering the airplane. And so when you see that inequality, it makes you think, you know, what are we doing here? The other thing that, and we're all seeing this, is this anti-business jet movement that's going on around the world. And you know, hopefully this will end, and I'm not sure what's going to be the impetus that caused that. But you know, we've seen a lot of press in the last couple of weeks with, with WeWork. There was in Seeking Alpha a couple months ago, the largest corporate jet abuser, which is a small insurance company in Kansas City. There was an article last month about Emerson and St. Louis and how they're using aircraft to support their business. There's a lot of anti-aircraft sentiment right now in the marketplace, and how are we going to address that? The environmental perception, and we all have heard about this. I really applaud what the OEMs are doing, but I think that the timeline on getting some of these new initiatives in place for engines and efficiency on the aircraft are pretty far in the future. And I don't think that, you know, in England right now, sorry, Al, they want to have, non-fossil fueled airplanes operating by 2025. That's or at least one of the parties does. That's not realistic at all. And then taxing the rich. I mean, you know, we know what's going on right now in the political situation in the U.S. I'm not going to go into that, but we're starting to see things like in Canada where they're proposing a 10% luxury tax on private aircraft, anything over $100,000. Net, this, you know, the trends that we're seeing, the costs that's associated, and where the market's moving in terms of the number of aircraft are pushing us in a direction we think that are going to cause some problems in the marketplace. So where does that go? We think that there's something missing. We think right now that the marketplace, the entire industry, is aligned with selling and operating aircraft. It's been that way since Bill Lear sold the first Learjet. And what we're finding is that most buyers that we talk to, they don't want to buy an aircraft. They want to buy what the aircraft provides them, and that's lift. Access to safe, affordable, customized lift. You know, we're seeing a lot of activities in the marketplace that are starting to generate that. We feel that there's something there, and we're really working hard on it. Right now, we're working with several industry partners. We hope to be announcing something actually at CJI in January. So Alistair, hopefully we'll be able to announce that there. But we think that there's an opportunity in the marketplace to, at the high end, to give owners really what they want, which is access to that safe, reliable, customized lift solution without actually making a capital investment in the aircraft and without going through a leasing product, and that, so you can eliminate the balance sheet exposure that current companies have. Anyway, that's all I've got. Al, thanks very much. Any questions?
Any questions for Brian? So you're going to announce it in January?
Yeah.
So we'll leave it to then. Thanks very much, Brian. Thank you.